Hi everyone, it's Stu here again. It's Tuesday, January the 7th. You can probably see there on the calendar. We've got some key data about to drop in about 15 minutes time. Yesterday we had the services PMIs out of the US. This is the more important one from the Institute of Service Management, the ISM ones here. They called them non-manufacturing PMIs, i.e. services PMIs, but we'll see what they look like. Remember yesterday there were a bit of a miss. The rest of the world, particularly in Europe, had been looking quite positive. And remember the significance of PMIs, they're forward-looking data, and they can have a bigger influence on currencies and stocks and yields in particular than many people believe. This morning yesterday we had hotter inflation out of Germany. This morning we've had cooler French numbers here, and construction PMIs in the UK. Counts for about 9% of GDP in the UK. Construction is not that significant, but again, it's one of those sentimental things. People like to see things getting built, or count the crane, count how busy cities are, and how many skyscrapers are going up, how many houses are being built, all that sort of stuff. But obviously, construction is much wider than that as well. Things like roads and general infrastructure. So 53.3, that was a bit of a miss. Quite a significant miss from last time at 55.2. So the overall first reading for inflation for Europe was in line with expectations. The headline 2.7, the core at 2.4. So we're ticking away from the key 2% again. So again, more pressure on ECB in their up and coming meetings. Unemployment remained at 6.4%. It says 6.3%. I had it at 6.3. Sorry, it's my memory fading since this morning, since I came out. So there we are. ISM PMIs. We've got the Canadian IV PMIs. Well, remember yesterday we had the leader, Mr. Trudeau, saying he was going to step down. So a bit of a vacuum currently, but the Canadian dollar moved quite nicely on the back of that. Also, and then we got JOLTS numbers as well. At the out of the US, 7.75 million is expected. See what that looks like. Remember, JOLTS is the number of vacancies in the marketplace. It's the number of people moving from job to job. So it's churn in the market as well. So it's not new job vacancies, but people moving from job to job. So jobs openings also in about 11 minutes now. As we go ahead. So just ahead of that, let me just point out, some people were asking me about live trading. So I'd taken this is on the DAX. I like trading, having a look at the DAX on an intraday basis. People have asked about shorter time frames, so because I talk about the hourly and the daily time frame all the time as my key fundamentals, and we'll have a look at the daily positions from yesterday as well that triggered close last night. But this morning, I was just having a quick look at the DAX, and here, this is the 5-minute time frame on the DAX. Let me just take it to 10-minute. We'll see the beginning of the day. So, Asian session, not a lot going on, as you might expect with the German DAX in the Asian market. But here, just ahead of open, remember the cash market opens at 8 o'clock. That's this candle here. Let me zoom it up. That's this candle here on the 10-minute time frame. So we'd been bullish before the open for about an hour. We rallied up quite significantly, spike on the open, and then we retraced. But we didn't retrace much. We went down a tad, and the 20 period moving average here on the 10-minute time frame held, and then it was tested again earlier on in the morning, and then it was tested again later. So what I was looking at the time was the actual 5-minute time frame. So here we've had a bullish start, a trend, what could be a trending day. It's difficult to say that it's going to continue after the first hour it's open, but it still looked quite positive. Obviously, we have no idea that this is going to continue to the upside at this point, but it's looking okay here, having a very much sideways action into close in the US yesterday and over the Asian session. So generally, it's with the trend. Remember, the trend is very much to the upside. If we go up to the higher time frame, we'd had a sort of big consolidation here. We remember when we were talking yesterday, we'd broken that 20,000 level
yesterday as well. There's that yellow line there, 20,000. So it was a bullish, strong day today. Were we going to see some follow through buying on Tuesday? Well, that is actually what's transpired. We didn't know that at the time, but keep the higher time frames trends on your side, and it increases your chances of a successful trade. So let's just go back to the ones I was having when I was sniffing around this morning for intraday trades. So this is the 5 minute, 10-minute now. So you can see this exaggerated sort of sideways action. There's a strong start, bit of a retrace. But again, you see how here on the 5 minute, this is what caught my eye around about here, 11 o'clock this morning. The 20 period had supported really nicely once, twice, 3 times. We were trending up. We'd rallied, retraced, rallied, retraced, rallied, retraced. The retraces would get a bit smaller, so we could have stalled at this level. But I thought, yeah, it's worth a bit of a punt. See if it holds again, and then nicely again for about half an hour. Remember, these are only 5 minute candles. The 20 period moving average held quite nicely, and then we broke away again, and then we started to move higher. And then here, 1240 was the big up candle. Again, no particular reason for this, but it doesn't matter. It's what the patterning is showing us. So consolidation, we've broken out of this little consolidation we'd had from this high here at 1110. So 1110 for an hour and a half, sideways, new candle, biggest candle of the day, remember as well, or one of the biggest candles of the day. Here, that's also indicated if we were here near, so that was nice. I wasn't around. I'd stopped my stop loss. That was down here initially, but that was it could have added at that position there. It could have easily added here as well recently, but we've rolled over in the last 20 minutes down. So we've pushed as high as 2,400. So I should have perhaps realised that round number was coming into play again. So another classic example there of targets being set around round numbers and profit being taken. For me, it's okay at the moment. However, there's the first sign of it cooling. You see here the 5 and the 9 moving average here on this 5 minute time frame, which is what we took it on, has crossed. So we may be looking for quite a significant break of the 20 period. But again, here we crossed here and the 20 period held here. So as we approach the data of the day, we may see some more action on this. But at the moment, I'm quite happy to leave that open. And probably the stop loss is all the way down there. Let's do this live. Let's move the stop loss. So we'll drag it up here on the 5 minute. I'm happy to have it around about here now. See where that resistance is. So just a wee bit below there. So 340. Let's make it 2340. Lock in some profits. 2340. Let's get rid of that. See how easy it is to do it. Your stop loss is set. Hopefully you can see all that on my chart because I've got the let's move it over. You can see all that. So stop loss, we're going to click to confirm. Confirm mode is there because I haven't got one set trading on. So we've pulled the stop loss up in line with the strategy on this time frame. Okay, so position's been modified. The stop loss has been moved up to 20,340. We've still got 5 minutes before the data's out. So there we go. Some live trading for you. People have asked, so there we go. I'm happy to deliver. So we'll see if this holds this time. Remember, again, we've tested it once, twice, 3 times. Fourth time may not be lucky. We may come crashing down there, but I don't care. I've got some profits locked in because I'm round about here, and that's trading for you. That's intraday trading for you. And on to the next one. Have a strategy. Follow your strategy. And, bag your winners, accept your losers, and roll on to the next one. Okay. And all markets do this from time to time. All markets do this. It doesn't matter. This happens to be the DAX. I like the DAX. It could have been anything. So long as you've got good, strict risk management in place and you accept when things go against you, you accept your losers. You don't mess around with your stop loss on the opening trades. And as a trend following trader, which I am, you follow up your stop loss to lock in your profits, and but don't get it too close until it can whip saw you out, which might happen now in the next 5 minutes. So this is a really good example of have we moved our stop loss a bit too close? You could argue we probably have, to be honest, on this short-term time frame, given the data that's about to come out. But let's have a quick look at today's data, what we're expecting, I say ISM say yesterday was sorry, the services PMIs were a miss yesterday, so 51.5, so it's quite weak here, just over the key 50 level. And have a look at JOLTS. JOLTS have probably been more of a market mover than perhaps the non-manufacturing one. This is the one we're looking for, 53.5 from 52.1, so expected to rise. If it's sort of around the 53, that should be okay. If it's back to 52, that's not going to be great, but we'll find out in the next 4 or 5 minutes. The other thing I said I'd have a look at today on the was the other Bitcoin, because we've got to let's leave that trade on. We've got to the key 100,000 yesterday, didn't we? Where are we? 99, and we're just under it now. Let's think. That's why I caused that the title to be over 100,000. So we had a good old run through 100,000 yesterday, and we're back to test it currently. So the bigger question is, where are we going from here? If we just go to the daily again, we see the rapid rise we had after the election. As I said in a post on Discord this morning, let me just check the time when the date's coming out. We'd had a strong run, so you might have expected a retrace today. So we've been up 1, 2, 3, 4, 5, 6, 7 days. That's the same after the election day. So it's the best day yesterday since the 24th, since Christmas Eve yesterday. It was our biggest candle since Christmas Eve yesterday. It was the 7th day of consecutive gains. And again, the last time we had that sort of consecutive run of 7 days was immediately post-election, where we went from this 68,000 to 89,000, and then 100,000 was breached as well. So a down day today is not a surprise, given the previous patterns we've seen, or previous movements in this market. But further ahead, so the down day today, stay locked in. That 92,000 is the big support area down here. 95,000 or 97,500 now is where the 50 and the 20-day moving average are coalescing. So that's a key support area, 97,500 as we go forward. But beyond that, the all-time high is looking quite vulnerable as well. This, given the noises that are coming out of the the incoming president. Remember, it's less than 2 weeks before Trump is inaugurated. Yesterday there was a move against the dollar on the sort of some news, a story within the Washington Post, probably running ahead of expectations, saying he's not going to fulfill all the strong tariff numbers he's talked about. On that, he immediately denied that on his Truth social media platform, and so we had a bounce back for the dollar. But it probably will be some sort of cooling of the election promises. However, that's what has driven Bitcoin higher. But the crypto market still has a lot going for it, outside of what Trump may do fiscally or with regard to regulation. So outside of that immediate area, we've still got some positive fundamentals potentially around Bitcoin, crypto, and Bitcoin in particular. So I remain quite bullish on Bitcoin, and you can't rule out these big round numbers. So 150,000 next level to the upside if we take out this all-time high of 108,000. It's quite easily attainable. 200,000 without, that's not a stretch even for this calendar year. But let's have a quick look at how the data has come out. I don't know if this is going to update automatically. We might be refreshing, and I'm going to lose the calendar. We'll see. Guys, if there's any particular asset you want to have a look at, please let me know. Let me just check if there's anybody in the chat box. There isn't. Not anybody asking for
info. Nope. Particular asset. Okay, so no, that I'm going to have to update the calendar manually, aren't I? Again, that doesn't do that. How annoying. So let's have a look at the data. And it brings in all the other countries I'm not really interested in, doesn't it? That's our ECB Euro data. So it's better numbers today for the key ISM services PMI. So the key one is this one here. The PMI for December is at 54.1. So it's much better than November, which came in at 52.1, and better than expected, 53.5. The prices have also gone up, though, quite significantly, 64.4. So again, that's perhaps feeding on inflation. And the jobs openings have tripped back over. Oh, by the way, just like my not my prop 3. I've got my prop 3 t-shirt. I've got my prop 3 sweatshirt on. The JOLTS have gone back over 8 million. That's the first time they've been back over 8 million for a while. If I just find on my previous calendar, and that was a key line in the sand, that 8 million. So 8.1 million. And it's the first time since October we've been over 8 million. The trend still remains very much to the downside, but it's quite a lift. And again, so it's a cooling of the jobs potentially. This is a key week. Obviously, we got ADP tomorrow and non-farm payrolls on Friday, but that openings number drifting back up over the 8 million mark. I can't show you the, in fact, I could here on. I'll show you my a different calendar, the Forex factory calendar. You see that the trend there to the downside, very much openings cooling down, but we've spiked back up here for January. This obviously could be related to the issues we've had with the hurricanes and the strikes and what have you. But interestingly, openings picking up again in December. Obviously, it's seasonality involved in that as well. So interesting one there to get our teeth into. So oh mate, I've lost you. There we are. So let's just go back to the charts. And say Bitcoin, strong 7-day run. Is it going to cool today? We'll see. But there's that key support, 92,000, and the big consolidation of all three of those moving averages now. Here, the 50, the 20, and my 9-period moving average there, and that 97,700 level. So zoom that up a bit. There we are. You can see a big. It's quite a thick wall. Obviously, the bigger the number on the moving average, the thicker the wall and the support is on that. Looks like our data, the data there has cooled stocks again, because our this looks like our let's go back to our DAX position, has reversed on us. Yeah, so there we go. We've got two here. Sorry, wait a minute. What I'm talking about. Let's go to the 5-minute time frame. So there we go. We did breach it this time, and we've gapped on the news. So again, another example of as there was the big news of the day was what's just come out here at 3 o'clock. And as I said, we probably should have took it out as it started to move down, but we didn't know how the data was going to go. It could have gone the other way. But when big data, I tend to close out. But I just wanted to leave it open, as I knew I was going to be live with you. So we got taken out on that. But so look what we ended up with. So we had just 0.04 lots, and we made $184 on that one from our entry earlier this morning. Back down here, following the trend, and there we go. See how it's a good demonstration of why I like moving averages. They held 3 times this morning. 4th time was too much. It didn't do like we did on our entry of flattening out. We gapped down on the news. That's the news that was giving us that. So stronger dollar, weaker stocks. So dollar index. Interesting to see if that. Maybe it's only 5 minutes time. Let's and here similarly
The dollar's peaked up on that stronger ISM numbers. Remember, yesterday's was weaker. This is more important, and it was better. So the dollar's peaked up. We're back to, I would have guessed we've taken out yesterday's high, or perhaps not on the dollar index. Where are we? Let's just go on the hourly time frame. So yeah, we're back to 108.35, the 50-hour moving average now, and it was remember we got to 109.35. We've been crashing down over the last couple of days, but a big reversal for the dollar. Let's have a look at some of the other crosses. So let's just go back. I missed the Canadian data on there. I didn't know how's the IB come out. That's interesting. That's IBP, the headline 54.7. So that's worse and not as good as expected, but better than last month as well. So similar trend there. Obviously, the political situation in Canada is having a bigger influence on the loonie at the moment. We'll come look at the loonie in a minute when we look at the major crosses. So let's have a quick look where we are. So Aussie, let's go up to the hourly. So chopping around. Sorry, let's go back to where we were. So downtrend remains set still. We did test the 20-day moving average yesterday, but we closed lower down here at 62.40 yesterday. But we was our third consecutive day high. So this is looking okay about cooling of the dollar. But again, we've rejected higher prices. We rejected breaking over the 20-day, but it's looking perhaps of a turn. And we currently trade at 62.40. To the upside, we go back down to the hourly chart, and it's much choppier. So we've had a good. This is the hourly chart. Where are we? This is the hourly chart. That's today's first 7th today. So a positive start this morning, and that's all been given back as the dollar's picked up again. So 62.40. We're under the 50-hour. Again, we'll see all this on most of the crosses now. So how much of this gives way in this hour? Remember, this hourly candle has just started. We've just gone to test the 50-hour. So this might hold like some buyers at 62.45 for the Aussie. Canadian dollar, obviously, we had that IV PMIs as well. So this has benefited the Canadian dollar. So this was an end of day short we'd had yesterday. Let me just put that back to the daily one. This was on our, if you follow us on our, or follow me on our Discord channel, there was a few. One of them was this one. This is dollar CAD from yesterday. This is a big down candle yesterday. We entered here at 143.28. I was looking initial target. Sorry, let's check this. 142.91. That hasn't played out, and it's reversed on me. So I might be getting my stop losses all the way up here. I might close that if we see a significant break of the 50-hour moving average. Remember, this is an end of day basis, so I'd need to see that break, and the 4-hour is there as well. So it's an interesting where we are at the moment. So I'll check that later about closing that short out. It hasn't played out. It's that was yesterday, wasn't it? Yeah, it was yesterday. We'd gone under my target, so we closed here, and I was looking for a quick another dip to that, but that hasn't happened. So that's our T1, and T2 is all the way down here somewhere. So our stop loss on the daily is all the way up there, and the daily it's here. There we are. It's on the daily. But remember, yesterday we talked about this consolidation at highs we got for the dollar, US dollar, regardless of what my system did. But looking at this, you can see it was a significant down day yesterday, but the 20 again. It's a good old 20-day moving average held. So might be one that the system has got wrong. Doesn't weight as much on the 20-day as it does on here. So bounce back for the dollar today, and I might be closing that out later on. But we'll see how that finished. I mean, obviously stop losses there to take us out. Other potential losing trade. The other one was CAD. Yeah, actually we'll come back to that in a minute. CAD yen's already hit its target, and Aussie. The other one was the Aussie, which had already hit its target, hadn't it? I can't remember where. It's on Discord, wasn't it? It's just a quick. I've got the numbers here. Yeah, it was this Discord channel here, guys. It was yeah. So that had already hit target Aussie yen. CAD yen hit 30 pick. Next was 111, and there's a dollar CAD one, which looks like might be taking us out. And Nasdaq was the other one long, but we'll come to that when we look at the charts. I've marked those two up. So that's out of the money at the moment. The short on dollar CAD, the data has helped that. Well, not helped that trade. It's impacted that trade. That helped better than expected ISM number. We'll come to that when we see it. So dollar yen remains bid, as we said. Again, consolidating like the dollar CAD, and this is obviously the better data for the dollar has helped lift this back through 58. We were through 58 earlier today. Got the hourly charts, the daily. Yesterday, sorry, I should say, and then we came back down this morning into the 50-hour, 20-hour, and then the data's lifted us back over 58. So we're still at these multi-decade highs. Whoops. For dollar yen, 158.35. And again, if we go up the time frames, we can see we've we've not been here since July last summer. So that next line in the sand we said before is 60, 160, and then the 161.80, which was a, as I said, 35-year high up here from July last year as well. And that's still looking, so that's consolidating here. Obviously may come back down, but that's still looking rather robust. We need some action from or change of action from the Bank of Japan or the government in Japan to start to ease the worries against the yen. Euro 103.66 at the moment. 2 up days in a row. Yes, Friday and yesterday. Strong day yesterday, back through 104. But sorry, into 104. We couldn't close above 104, I should say. Sorry, excuse me. We're having another go of it today. But again, the 20-day moving average 104.12 now, so it's coming down. Will it breach 104? We'll see. The trend remains set to the downside. 2 good up days, but we'll see what happens today after that US data, and then obviously jobs, ADP tomorrow, non-farm payroll on Friday. So yeah, can we break the 20-day moving average? The key 104 level is holding for the last 4 or 5 days for euro dollar traders. 103.66 is where we are at the moment. Sterling got back over 125 earlier. Let's go some look here. Hugely important 125 level earlier yesterday. We finished relatively positively, but we've come back to test it now on that better data for the dollar. Under 125, will this hold? Hugely significant. I say this all the time, don't I? Hugely significant level. Obviously, we've got the FOMC minutes as well tomorrow. I forgot about that. I'll be live for that as well. That's obviously going to be a major impact on where we go from here. But as you can see, the trends remain set. We look like we were bouncing up, but we've done that before, haven't we? 20-day moving average holding at the moment, 50-day all the way up there at 126.72 for cable. But these are quite weak areas for this pair as well. So brief flurry over the 20 there at the beginning of December. Then we went another leg to the downside. So some volumes back in the Forex market. So for cable traders, 125.50 needs to be broken, and broken significantly, really. See this? Zoom it up. See this sort of consolidation area here. Now that 20-day is below the level of this channel here, this top level here. So that low there from the 18th of December is above its 20-day, and that sits at 125.70. So 125.70 needs to be breached significantly. Big bodied candle for it to move to the upside, I would argue. First, obviously, a close above the 20-day would help. But 125, key, hugely significant number historically for cable traders, and that's where about we set them out 124.95 as I speak. Where are we? We're quarter past the hour, so that's the majors crosses. Indexes would have weakened on the
as we saw with the DAX, with a weakened on the US data. So US 30, the Dow down, well, really mixed day yesterday, sort of mixed day across the board. The S&P was up 32 points at 5975. Obviously, Trudeau's news hit the Canadian, lifted the loonie a bit yesterday. Nvidia's news, a huge news overnight. They were up all-time high 149.43. Nvidia closed yesterday. The CES conference, the big computer conference in Las Vegas, enormous news announced there from Nvidia's chief executive and founder. Some fascinating power in some of those chips he's talking about. Huge move for that particular very, very hot stock. So stocks were up. Sorry, this is the 30 on the daily. I was trying to look for the hourly, what we've done today. So there we go. The down leg, as you'd expect, on that stronger ISM number. So a bit of a sort of sideways. That's not trending. That's a bit of a mess there. Had been quite positive start off with, a bit like that DAX trade on a shorter time frames, but a big turnaround on the main news of the day. The US market is where are we? We're 45 minutes into live trading, and the live cash markets are all down. The Nasdaq's down 0.8 of 1%. The S&P is down 0.43 of 1%. And the Dow, which we can see here, our derivative at 42.65 is trading at 42.65 as well. So they're in line, down 62 points from yesterday's close, courtesy of that better data from the US, I've said before. Let's just have a look at the other trade we took last night was the Nasdaq, wasn't it? Still long. Was it Nasdaq? I think it was, wasn't it? Nasdaq 100, wasn't it? Yes, it was. Stop loss. There we are. It's got the daily time frame. It's quite wrapped in. Again, another one. I'm closing. It's against it. So our target from yesterday's close here, we're out of the money. But again, there's the 20-day moving average. Just sat right on it at the moment. Stop loss is a lot closer here on this on my offline end of day trading system. So that was our entry up here at 2160, 620. I think I got it filled at. Or was it 610? I can't remember. I'll have to look at it. Stop loss was quite tight, 21,295, isn't it? It's that one there, yeah, 21,298. That's right, 289. I remember that one. That looks like that might be getting stopped out today. Our target was back up here at 21,950. So that's still open. We'll have a look at that later. But the 50-day, I say, is the main one. Strong up through the 20-day, down day today on the data, still holding up in the US. JOLTS and ISM combining to sink stocks, lift the dollar, and lift yields as well. I would guess, yeah. So S&P back under the key 6,000 level, which we breached yesterday on this purple line here on an intraday basis, and again down today, like the Nasdaq we've just looked at to the short side. That's the only trades we were open. The other one was CAD yen, and it's probably reversed as well. But let's have a look at it for good measure. Crosses CAD, yeah, there it is. So we hit target 1. This was yesterday's close. We'd hit initial target for CAD yen. Next target, so it's about 30 pips or so, wasn't it? Next target is up there, and actually mark that on here. Well, let's put that on there for good measure. So around about 111. There we are. Is the next target 2. So 80% of that was taken off. So that was our entry yesterday. We got to our initial 30, 50 pips. Again, I can't remember which. Was it 30 pips? It was. What is my chart? There we go. So 30 pips yesterday, safely bagged, and 20% of the trade still open, trying to the upside. But again, interestingly, that's held to the upside. The weakness in the yen is outperforming the weakness in the my lines have gone. So I've lost my raise. I don't know. Did I not save them? Oh, never mind. No, there we are. There's that right. 111. So yeah. Anyway, that's CAD. Yeah, that's the other one that was open. Trades watching today. Currently, I'll run through them quickly. Let me just quickly update my system here. For tonight, end of day at the moment. Obviously, still a long way to go. So just bear with me a second, guys. Swiss yen. I'm not sure whether it's long or short. Probably long. Euro Swiss. Euro yen. Pound yen. Kiwi yen, so the yen and dollar yen all looking to trade to the let's have a look what that one's looking like. Dollar yen, yeah, all looking to go long on close. The last dollar yen trade on this particular system I'm looking at here was stopped out. It was a short from the 3rd of January, obviously low volumes. This is continuing to go high, so this is looking to track higher on this again. 158.50 target. I mean, we're quite close to that already, aren't we? So again, just a quick 30 pips on an overnight basis. So dollar yen and a lot of the other yen crosses looking to trigger long tonight on my end of day strategy, and the more aggressive one would be probably even more yen. Yeah, euro yen, euro Swiss, pound Swiss, Aussie yen again. No, Aussie yen, that was today. That was yesterday, wasn't it? We talked about that one. Actually, there's less of those, interestingly. So euro yen, sorry, euro Oz, euro Swiss, and pound Swiss are all looking to go long on the end of day basis at the moment at 3:30 here in quite nice London. Actually, it's a blue clear sky today. It's very cold, but the miserable cloud has disappeared. So anyway, that's an end of day basis. So there we go. Any questions, anybody? Let's have a quick check. Any assets you want to have a look at? No. So let's finish off with everyone's favorite, gold, which continues to amble sideways. 2651, 2652 at the moment. I need to take all those off. Those was intraday trades. Interesting gap here. I missed that. I literally haven't looked at this gap here on the data to the downside. So stronger dollar significantly impacted the gold market. Quite a significant move there, wasn't it, on that on the ISM data and the JOLTS data. Pulling gold. So gold went all the way down. I know somebody's playing with this. 2641, and we'd been as high as well, not as high as yesterday, but we'd been as high as 2663. So $25 move there on the gold market. Let's have a look at that short term. See how that reacted. So that was generally sort of running it, waiting for the data, wasn't it? It gapped down there. I need to take these ones off now from the other day because it's going to confuse me. Let's delete that one. Let's delete that. Just bear with me. I'm here cleaning up the chart a bit. So gold. Actually, let's go back to the default daily, which it won't with impact. Let's get rid of these now. We don't need these now, do we? On the panel. Sorry, there we go. So continued sideways action through here. Continue. So we're up today currently, but down in the short term for gold at where we're trading 2652. So if you'd like to come and join us at theproptrade.com, give yourself a chance. We've got the welcome 25 discount has been rekindled. So key in welcome 25 as in the coupon code here on the website if you'd look to buy a challenge. So let me just go back to so if you come to the website at theproptrade.com, here we are. Our calendars are here, our tutorials are here, the evaluations are here, and standard. Let's start with standard. So if you want to buy standard challenge, coupon code welcome 25 is valid again, welcome 25, and that will take 25% off any challenge you're looking to get started with. So
again, I like the 25,000, 50,000 sort of level. It gives you a bit of sort of, as I say all the time, a bit of margin to take those trades you might not take, like CAD yen trade, or you know, other crosses that you may not take. So this will take a quarter off this 175, so it brings it down just over $100 for this particular trade. If you haven't got that, you know, we start at 5,000. That's only $55, so 25% off $55 brings it close to $40 for a getting started with a $5,000 account. So we're here to help, guys. Do come and join us. And you know, if you're feeling you know, a bit more of an experienced trader, and you want the flexibility of the leverage of the prop trading company, you know, don't be afraid to look at these bigger 100,000 and 200,000 accounts. You know, the rules are there. They're there for a reason. You know, we want profitable traders. We want you to be profitable. We want to pay you. We want you to go and tell your friends and your colleagues, and you know, whether it's work, wherever it is, to see, you know, anybody can learn to trade. It's not an intellectual exercise. It's not a, you know, I'm not clever enough to trade. Anybody, anywhere in the world can learn to trade. It's all about emotional control. It's all about understanding yourself on what works for you. You know, are you a trend following trader like me, or are you more looking for, you know, extreme, and you know, go big? Are you more, you know, trading 5-minute time frames? Are you more trading daily time frames? What works for you? How you manage risk? They are the key things that separate the successful traders, traders that stay in business for a long time, that are still doing this all these years later. And you know, you hear the same story from all these successful people. And just while I'm here, just before I go, I brought some of my books in today. One of my favorite books of all time has got to be Trading in the Zone with Mark Douglas. This is about the 4th or 5th copy of this I've got. It's a hardback one, $30. One of the best trading books you can buy. More on that. I'll introduce some more trading books this week. It was wrote many years ago now. There's nothing wrong with that, because markets don't change. People don't change. They go up, they go down, they go sideways. And anybody can be successful at this business. So do come and join us. We'd love to have you on board. Welcome 25 will get you a 25% discount on our current range of challenges, anything from 5,000 all the way up to 200,000. You know, $1,000, you know, you get 25% off that. It's quite a big saving, isn't it, dollar terms? So get yourself going. All right, take care, everyone. We'll see you all again tomorrow for the Fed minutes. Nice to have you with us, and have a safe day, and I say stay safe, everyone. All the best.